Hello and welcome. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. Suyash Maheshwari here with me in the studio. Suyash, good afternoon.
Good afternoon.
A lot of volatility movement in the markets today.
Yes, Shweta. So, but after opening, about 0.5% lower, markets did try to bounce back in the morning trade. But after at around 10 a.m. or 10:30 a.m. or so, we saw a sharp crash, which took Nifty even below the 19,700 mark. Now, at close, Nifty was down about 140 basis points and closed at around 19,670 sort of levels, whereas sensex dropped about 550 points and closed below the 66,000 mark. Now, today's fall is on the back of a pickup in the crude oil price, which the last time I checked were hovering around the $91 barrel mark. Also, the bond yields have spiked up again. They were trading at around 4.84%, the 10-year bond yields, which is a 16-year high. Another factor that's probably weighing on the markets is the escalation in tensions in the Middle East, as we have seen that in the last over the last couple of days or so. Now, talking about the broader markets, broader markets which were trading with moderate gains this morning also erased all those gains and ended deep in the red. Now, the Nifty Mid Cap 100 was down about 0.9% in today's trade, whereas the small cap index ended about 0.34% lower. We also saw a spike in volatility. India VIX jumped by about 2.8% in today's session and currently hovers. It's settled at around the 11 mark. Now, among sectors, Shweta, the banking and the IT pack were the biggest laggards today. The Nifty Bank Index ended about 1.2% lower, even settling below the 44,000 mark, which is actually its lowest close in the last 1 month or so. We have not seen these kinds of levels since September, like early September. Nifty Financial Services also ended 1.3% lower. PSU Bank, Shweta, ended 1.67% lower, whereas the private banking pack ended about 1.17% lower. Another sector that was under pressure today was the IT pack. The IT pack fell about 0.6% in today's trade. Now, if you see the fall in banking and IT stocks, Shweta, this is on the back of a strong retail numbers coming from the US. Now, what happens is when there are concerns about inflation, of course, back in US, when there is a strong economic data coming out from the US, it adds to that inflationary pressure. So, to kind of counter the inflationary pressure, the Federal Reserve has to keep the interest rates higher for longer, if not raise the interest rates over the next couple of policy meets. So that has created a risk of sentiment in the markets, and a lot of emerging markets as a result were trading lower today, and Indian markets also saw a sharp correction.
All right, so a fear of higher for longer and perhaps constant rate hike cycles in the next couple of months to come is hurting sentiments in various Asian indices as well as in India. Kranthi Bathini joining us on the show. Kranthi, thank you very much for taking time out. Let's quickly understand by what happened in the markets this morning. There was a flattish opening, a better to medium expectation of results that would pour in, but towards the end of the day we are looking at a sharp rebound. What are you making of the volatility?
Yeah, Shweta, you're absolutely correct. It started with a flattish kind of opening, but as we progressed during the trading day, it was very sharp. The correction is very sharp. But if you have to envisage, Shweta, currently after the rally of last couple of trading session, a strong rally and rebound what we witnessed in the market, and yesterday market tried to go above the resistance zone of 19,850 range, but that's where the crucial thing taking in terms of the geopolitics or in terms of the increase in the crude oil prices or the global cues, whatever be the reason, okay, market could not able to sustain above that 19,850 range. That's where the strong resistance is coming for the market at this point of time. Of course, there is nothing to worry at this point of time. The long-term trend is in an uptrend only. It is a kind of global cues, more of that, and also markets also rebounded from a level of 19,200 range most recently. So we are in a consolidation phase right now. at this point of time. That is the reason, that is a key factor for the markets to drift down right now. What we can see in this market is it's more like a range bound market at this point of time. Probably we can see the market at 19,500 to 19,700. This is the range we need to carefully watch at this point of time, Shweta.
All right, range bound 19,500 to 19,700, breaching the 19,700 mark at this point in time. But, crucial results, as I said, have started pouring in. Let's quickly run through numbers for Wipro. Wipro came out with its quarterly earnings just about a couple of minutes ago, Suyash.
Yes, Shweta. So the first draft of the numbers that I can see, it looks like Wipro has missed the street's expectations. Revenue figure came in at around 22,395 crore in the in Q2 FY24 versus expectations of about 22,760 crore. Now this is 1.6% lower than our estimates, and on a quarter-on-quarter basis, it's about a 2% decline. Now net profit, Shweta, declined by about 7.7% on a quarter-on-quarter basis. Also, it is lower than our expectations by about 2 to 3%. Net profit came in at 2,650 crores. Versus 2,870 crores in Q1 of FY24. Margin, which we were expecting at around, to improve by about 90 to 95 basis points on a quarter-on-quarter basis, also came in lower than what the expectations were. Margins expanded by about 10 basis points on a sequential basis and came in at 16.1% versus 16% in the previous quarter.
All right, that is, of course, as far as Wipro Q2 results is concerned. Kranthi continues to be with us. Kranthi, what are you making of these numbers?
Yeah, Shweta, I have not got the time to look into the numbers in a detailed way, but what I can sense is the pressure we can see from all the IT majors, the margin pressure we can see, and also the guidance is quite weak with respect to the all the IT companies, which are the bellwether IT companies are concerned in India. What we can sense at this point of time, Shweta, there is a order book visibility. The TCV value, the order book winning value is strong, but where the problem is the execution. The vendors, the companies are taking time to execute the orders at this point of time. That's where the pressure is coming on with respect to the revenue, and there is a spillover effect. And as this spillover effect has been creating on many factors. One thing is IT companies always try to keep the workforce on bench, or they used to go to the campuses in advance and they used to recruit the human resource in advance prior to their completion. But right now, the companies are not going to campuses at this point of time. In fact, what we witnessed in this quarter is the workforce came down among all the major IT companies are concerned. So it shows some kind of skittiness with respect to the businesses are concerned. Probably it might continue for another couple of quarters also, it can be possible. So we need to understand these numbers. But the other side, as Shreyas in his introduction of the market today, is mentioned US economy, the numbers are coming one way strong. And in fact, in US economy, one of the key causes of concern is the inflation. What does it reflect? One way is a strong growth. The US economy is going strength to strength. But the cause of concern is when this growth will take a pause because of the measures taken by the Federal Reserve, and what kind of impact it's going to create on the company's individual earnings in the coming future. That's where there is a dichotomy with respect to the order winning and order execution is concerned. That is the key cause of worry for major IT companies at this point of time.
Now, Kranthi, we also have some guidance coming in from Wipro. Now, the IT services company expects revenue to fall in the next quarter by about 1.5% to 3.5% in constant currency terms. In dollar terms, it will be in the range of about 2,617 to 2,672 million. Do you think this will be a major dampener for the stock in the upcoming trading session?
Actually, it can create some kind of pressure with respect to stock price is concerned in the coming session. And given the kind of selling pressure what we have witnessed today, it can create pressure on the company. But one thing is, if you see the stock price, it's already in a range bound, Suyash, from quite a long time. The stock has been hovering around the 400 level quite a long time. We can say it is forming a base over there. So there will be some kind of impact on a negative side, but I don't think so. There will not be any great extent. There will be a pressure on the stock price is concerned, because the stock has been in this range. It got stuck up from quite a long time.
Now, Kranthi, to your point, I was just looking at the price charts. Wipro has actually underperformed all other, like all other three peer companies in terms of returns on a 1 month basis as well as 6 month basis. Even it has underperformed Nifty IT. So, do you expect the returns to be muted going forward? And I mean, if you take the entire IT basket, at least the top 4 companies, what would be your preferred bet?
Yeah. It's Wipro. We can consider this as a high beta when compared with the other bellwether companies are concerned. The preferred bets are at this point of time is it all depends upon the risk appetite of the individual investor. Okay, the less risk averse investors, they can first the priority is TCS and they can go to Infosys, and those who are the risk appetite high investors, okay, they can do HCL, and in this list one can have high patience, and one can take the one if anyone have the high risk appetite Wipro, but there is no hurry. There is no need to go and jump and buy these stocks immediately. One can in a staggered manner. What happens is these IT stocks have a typical tendency. If you expand the territory for more than 5-10 years, these stocks outperform the other benchmark indices. That's the beauty of this IT index. They have a strong business model, strong cash flows, but right now they are in the earnings looks very murky at this point of time. So that's where the real pressure is coming with respect to the IT stocks are concerned. And when we interact with the mid cap have not started for the earnings. When we interact with the mid cap IT companies, they had a very dream rally despite of the underperformance of the large cap IT. It's a complete divergence between the mid and large cap IT companies because of the specific domain they operate, because of the geography they operate. Mid cap IT companies are quite optimistic when compared with the large cap IT companies at this point of time, Suyash.
Okay. Now, the guidance also coming in, we have seen Infosys cutting down its guidance for the full year revenue guidance. We have seen HCL Tech cut its guidance. In fact, Wipro has also cut its Q3 guidance. So, in lieu of that, do you expect FY24 at least to be a difficult year for the IT companies? If so, when can we expect recovery from the IT pack?
Yeah, Suyash, you nailed it actually. Okay, yeah, the as per the if you understand from the commentaries from the management, it seems to be next 2 quarters. That means the FY23, the financial year can be a challenging quarter for the majority of the IT companies. But one thing is the long-term horizon investors. Okay, it might be a 6 months underperformance, and market is always a forward-looking animal. It tried to discount the future growth, and it tried to give the underperformance also immediately. So the longer term investors, okay, who have the patience, they can selectively they can choose the stock selection right at this point of time.
Okay,
given the kind of strong
right
business models they have.
You also briefly mentioned, since we're talking about Wipro specifically, you mentioned the total contract value of Wipro also remains high. There are large deals that have not been executed just as yet. How confident are you about Wipro, given that Wipro results are in fact far, far away from expectations when compared to other peers? The other bellwether peers seem to have done much better.
And also, I mean, Wipro has not really landed any major deal in the quarter gone by. We saw TCS land deals, I mean long-term deals for sure, but deals worth billions of dollars. Infosys also, HCL Tech as well. We did not hear any announcement from Wipro. So is
So
TCB
where are
going
you,
to be a concern?
and where are you placing, Wipro?
Wipro will be in the bottom list of the stock selection, but in fact, right now it's not the preferred choice immediately. We will wait and watch for the further commentary from the management, how the things are going to pan out. In fact, we can witness the same thing with respect to the stock performance is concerned, Shweta. But what we can sense from all these commentaries from the managements, altogether all the large cap IT companies, the majority of the segment-wise income is concerned, the banking and financial services. That's the major vertical for majority of the companies of Indian bellwether IT companies are concerned. That's where the problem, okay, where the subsets like wealth management, investment banking, this is the high margin businesses. That's where the pressure the IT companies are witnessing. Some kind of solace is coming with respect to the healthcare, and engineering. This is the segments which are doing well. In fact, healthcare is giving some kind of support, but banking and financial services, that's where the major deal wins are not coming at this point of time. And it seems to be the pressure can be continued for at least for a quarter. We need to see the fourth quarter. Traditionally, fourth quarter can be a strong quarter, but given the kind of management guidances, we can see there will be challenging times for the IT major companies are concerned going ahead, Shweta.
Right. All right, Kranthi, let's quickly move on from IT pack to banking space. IndusInd Bank has also come out with its Q2 numbers. Let's quickly take a look at the numbers on your screens at this point in time.
So Shweta, I think the numbers, at least on the profitability front, are actually ahead of the estimates. We were pegging IndusInd Bank's Q2 profit to grow by about 20% on a year-on-year basis. It has about 22% higher at 2202 crore in the quarter gone by versus 1805 crore in the year ago period. Net interest income, which we had expected to come in at around 20% higher on a year-on-year basis, came in at 18% higher. Net interest income stands at about 5,077 crores against the expectations of about 4,300 and against Q2 FY23's 4,302 crores. Okay. Now, net NPAs have declined by about 40 basis points from 0.61% in the year ago quarter to about 0.57% in this quarter. I mean, Kranthi, the results look, I mean, there is a beat on the profitability front, but net interest income has come below the street's expectations. Also, the street was factoring in a lower number in the first place, given that the higher cost of funds was expected to pull down that number. How are you reading the numbers, sir?
Numbers look decent, given the kind of, as you mentioned, the high cost of funds at this quarter, and the interest rates have been rising up, and bank has to compete with other corporate banks also. So numbers look decent at this point of time, Suyash, and any dip in names like IndusInd Bank, it's a good entry points for the investors at this point of time. We need to see when the NIMs can go up. The cost of funds is also one of the key things. We need to wait and watch. Overall, it's a decent set of numbers. That's what I can say with respect to IndusInd Bank is concerned at this point of time.
But I mean, will you recommend buying the stock? Because over the last 6 months, the stock has done fairly well. It's up about 29%, whereas, you know, the peers such as HDFC Bank is actually down about 8%. ICICI Bank is down about 7.8%. So we have seen a good, performance from IndusInd Bank stock as well. Even I think a couple of weeks back, it hit a 52-week high. So will it be prudent to enter the stock at current levels?
Yeah, any dip names like IndusInd Bank, it's a very good entry level for the investors who are investing with a medium to long-term perspective. Definitely, it's a good entry level for the investors, even the fresh investors. Any dip in the stock can be a good opportunity to enter whenever there is a knee-jerk kind of reactions at this point of time. It's a good entry level for the investors. Suyash.
All right, staying on with the banking pack, PSU banks have been laggard in the past couple of sessions. What are you making, with what's happening as far as PSU banks is concerned, Kranthi?
Yeah, Shweta, they had a dream rally, we can say, and
So it's
they
all
are in
profit
just a
booking now?
yeah, and also the weakness in the market making them to book in the making the profits at this point of time. Uh, we need to wait and watch for the results. We can expect a decent set of numbers from all these PSU banks are concerned. In a medium to short term perspective, they looks compelling at this point of time. We can see some kind of some steam is left with respect to PSU banking stocks are concerned at this point of time, Shweta.
Now, Kranthi, not only in PSU banking stocks, we are also seeing correction in the PSU stocks. In fact, I was looking at Hudco today. The stock fell down about 11% when the government decided to offload its stake to meet that minimum public shareholding norm of about 25%. Now, there are about 16 PSUs in which government holding exceeds that 75% threshold. So would you recommend, given the kind of returns that we have seen and the rally we have seen from PSU banks, some of them which have turned multi-bagger, would you recommend investors to book some profits or now, or completely exit the space at this point in time?
Yes, all these PSU stocks, majority of these stocks have been in a momentum zone. Okay, some stocks without any fundamentals also they have been going up. So for the investors, a serious investors, this is not the place to be in. It is mainly for the traders and the momentum investors who like the momentum. One need to have exercise strict stop losses when they are entering into these kind of counters. Okay, just to mention, as you mentioned, Hudco, the stock was a laggard. But as I have been telling we have been discussing on your show also, there is a two-digit factor is playing. Most of the stocks who are in this two-digit, just to mention MMTC, Hudco, all these stocks have been momentum in nature. If the trader have taken the position, better to book some profit from the table at this point of time. And if still they have the risk appetite, they can hold, because these are the momentum incomplete in nature. Okay, when the momentum stops, we don't know exactly. So better to take some profit from the table in these names.
All right, while we're at it, let's also take a look at top gainers and losers.
Yes, Shweta. So in today's session, Cipla was the top gainer among the blue chips. Cipla gained about 3.5% in today's session, and in fact it has extended its rally to 2 days. Yesterday also it was up about 1% or so, and the volumes were also high compared to the 1 month average. The volumes, about 44 to 45 lakh shares exchanged hands in today's session, whereas the 1 month average is of about 15%. Dr. Reddy's was another stock which was up about 2% or so. The share is also on a 3-day winning streak, and we have seen a good bit of run up coming in from Dr. Reddy's as well. Tata Motors, which Shweta was hovering near its all-time highs, although it corrected yesterday, once again picked up. The stock ended almost 2% higher. Now I was reading a report now, CLSA has raised the target price on the stock from about 773 to I think 803 rupees. I think that's why we are seeing some sort of a pickup in Tata Motors stock. Sun Pharma was another pharma stock which featured among the top gainers today. SBI Life also ended about 0.5% higher. Now among losers, Shweta, was Bajaj Finance. Bajaj Finance stock ended almost 3% lower. I mean, the company did come out with its Q2 results, so the market only got to react to the results today. The numbers were more or less in line with what the street was expecting, but I think the concerns raised by the management as far as the NIMS is concerned has been one of the reasons why we are seeing 3% sort of a correction in Bajaj Finance. Bajaj Finserv, which is the holding company of Bajaj Finance, also saw that rub-off effect coming from the results of Bajaj Finance, and it was also down about 1.9% in today's trade. Other losers were NTPC, which was down about 1.5%, SDFC Bank, which was also down about 1.44%, and Reliance Industries, which was seeing some sort of a movement in the last couple of days. It saw some profit booking in today's trade, and it is down about 1.44%.
All right, those of course are top stocks that we are tracking here on News9. Kranthi Bathini, thank you very much, sir, for taking time out for joining us here on the show. And shifting focus now to a story that is just breaking in by way of a hike in dearness allowance. The Union Cabinet today cleared a 4% DA hike or DA relief hike for central government employees and pensioners. With this decision, the DA for central government employees will now be increased to a whopping 46% from existing 42%. The decision will have a positive impact on 47 lakh central government employees as well as 68 lakh pensioners. Central government, remember, employees will get the enhanced salaries for the month of November along with arrears for the period between July to October, and the hike will be effective from 1st of July 2023. My colleagues Karthik Malhotra, Krishna Kumar walking us here to discuss what sort of impact will that DA hike have on people. But I think impact or no impact, but cheers for people who are working in central government, various departments. There is something to look forward to ahead of festive season, more money in hand.
Absolutely. So I think a 4% hike is fairly substantial, and this is a hike only in dearness allowance and is going to be part of the recommendations of the 7th Pay Commission. So from 42% to 46%, that's a substantial jump. So I think festivities around the corner, great
so much
news.
for us.
I think anytime there is more money in the hands of anybody, it is good news. But of course, DA is also subject to tax and taxation norms. So real cash in hand, how much dent it'll make to government employees, and does it beat inflation, because dearness as a concept is inflation linked, and we've seen inflation is definitely much higher than 4%.
Inflation is 5%.
Right, exactly. So
DA
a 4% hike in DA does not cut it when it comes to inflation.
So at best, it's a healing balm for the times that we live in. It will sort of lessen the blow or the impact
it lessens the blow.
Yes, of the rising prices. And of course, all of these moves, you know, the timing of it all, as Karthik is talking about, is very important, you know, right bang smack in the middle of the festive season. And of course, overall, to drive consumption, if government is seen on a path where it's willing to put more hands in the money of its own employees first, it's definitely a move towards pushing that all-important festive consumption season further. So the way forward is hoping that like people fear inflation less. It's not going away for sure.
All right. And since the government is trying to ensure that people fear inflation less, it's also ensuring that the prices of rice, sugar and various other commodity remains lower. As a matter of fact, the government today in fact extended export curbs on sugar beyond 31st of October to ensure adequate domestic supplies amid higher demand and output concerns in major producing states following weakest monsoon season in last 5 years. The date of restriction on export of raw, white, refined and organic sugar was extended beyond 31st of October till further orders as per a DGFT, which is the Directorate General of Foreign Trade notification. Meanwhile, India also decided to lift restrictions on exports of non-basmati white rice to specific countries including Nepal, Cameroon, Malaysia, Philippines, Seychelles, Ivory Coast and the Republic of Guinea. All those countries and more will get rice from India. So an export curb stays. However, some of these countries have been excluded as far as rice is concerned.
So I think what I really need to understand from this print is that while these countries are open now to receive rice from India, is there a limit like the government had done earlier?
Okay.
So as long as this is unlimited rice export or the equilibrium of demand from these countries versus what India is supplying is being met, then I think we can safely assume that the government is now lifting slowly, steadily the curbs that had been put in place to cater for the domestic demand in the double-digit inflationary scenario that we were living in up until, you know, as recent as about 2 months ago, July data. Now, if this is linked to a certain quantity, then these countries that you mentioned, Shweta, get added to the basket of countries including Bhutan, Singapore and a few African nations which already had been excluded from the complete restriction, of India exporting rice. Now, again, I think important to note here that we are talking about non-basmati rice, we are talking about white rice, and the MEP on export of basmati rice had been an issue of contention on which the government did reduce finally the MEP or the minimum export price, which has come into effect yesterday. So overall, I think the whole conversation around India continuing to be a major source of food for the rest of the world, and allegations against India in Western media suggesting that, hey, India is adding to inflation in the West because of these curbs, should ease out. Not that it matters. I think for the government of India, the priority still is to keep inflation, food inflation specifically in India, low, manageable if not low, and then cater to the world. Like they often say that, wear your own mask in an aircraft before assisting others. So I think the government of India has done a good job of wearing its own mask first, ensuring there is enough supply for the domestic market before slowly, steadily easing these export
and helping other
nations. Who would have thought that there's not enough sweetness in the country, that we need to retain some of that sugar.
Absolutely.
We're doing the opposite of what is happening with rice. But the fact of the matter is that we've been doing this back and forth. This is an overall part of managing enough domestic supply situation, be it anything from vegetables to pulses to rice to sugar. So this I think is cyclical in a sense that, like, when you have sugar production is expected to fall significantly, and sugar production in this country does go through its vagaries over a period of time depending upon the monsoon. So in a sense, you have the government essentially managing stocks, stockpiles, so to speak, of the most essential items in the world. And for the life of me, I didn't realize the fact that we wouldn't be having enough sugar in the country this time around.
All right, and not just that, come to think of it, it's been a bad monsoon for a lot of sugar producing states, including states of Maharashtra. And a weak monsoon essentially means that you cannot have enough sugar supplies, and to meet those supplies and to meet that demand into the future as well, this is a preemptive measure. We may have enough sugar stock for now,
Fingers
but
crossed.
to maintain inflation in sugar prices, that of course is a step government has taken. But interesting times we're living in, Karthik. We are easing export restrictions, putting in more restrictions. It is playing up to what is important for the country as opposed to what the world needs at the moment, trying to be self-sufficient.
True, and I think if you were to look at India itself, I think there is update even on wheat.
Yes.
So even on wheat, we've seen the MSP increase by about 150 rupees.
In fact, all of that was part of that Cabinet Committee for Economic Affairs meeting that took place. In fact, both the stories that we just talked about, the hike in the dearness allowance for government employees, that decision of 4% hike in dearness allowance for government employees, and the decision to hike the minimum support price, or MSP, or the price at which the government procures from the farmers, a hike in MSP. So good set of news, booster shots coming in for the economy for Indians at the right time. So the timing is very important. So two sets of good news from that Cabinet Committee for Economic Affairs: hike in dearness allowance and a hike in the minimum support price for wheat. Bodes well for both employees in the government and the farmers of this country as well, Shweta.
All right. So, as far as MSP for wheat is concerned, that's also been hiked. But, a lot of news items coming in, by the way, of how much India produces and to what extent the government wants to support that production. But moving on to another story that we're tracking, coming in from Reserve Bank of India, which has imposed a penalty of 3.95 crores on Kotak Mahindra Bank and 12.19 crore on ICICI Bank for non-compliance with a few regulatory norms. Now, what are the charges? ICICI Bank was penalized for committing loans to companies where two of its directors sat on the board of these companies. The bank is also said to have engaged in marketing and selling non-financial products and showed negligent attitude towards reporting these frauds. This, of course, is as per RBI. Kotak Mahindra Bank was penalized for failing to conduct an annual review or due diligence of its service provider and for violating contact hour norms with customers. Remember, the contact hours are between 7 a.m. to 7 p.m., not after 7 p.m. till 7 a.m. The bank also faced criticism for charging interest from disbursements due date rather than the actual disbursement date. A lot of charges there, but a penalty, of course, imposed on both Kotak Mahindra Bank and ICICI Bank. RBI setting a precedent that, look, even if it's a small norm, it is an important norm. As far as it's a norm, you have got to comply with it.
So to a layperson, I think, Shweta, for somebody like me, the story emerging from the Kotak Mahindra Bank and RBI's penalty, even though a small monetary amount of just 3.95 lakh crore rupees, not substantial for a bank as large as Kotak Mahindra Bank, but for me as a consumer, and I'm sure everybody out there who's listening to us watching this show right now would agree that there are these pesky calls which keep coming, and Kotak Mahindra is honestly not alone. So you're right, it could be a precedent being set by RBI that certain norms need to be complied with and are non-negotiable when it comes to compliance. Now 7 a.m. to 7 p.m. also, if you ask me, is a fairly long 12-hour window.
Good window.
So there must be some very enthusiastic employees who are working beyond the call of duty to meet the target set on them, to make those phone calls either early in the morning or late in the evening. But that is just one part of the story. I think when it comes to the interest levied by Kotak Mahindra Bank, again, very important, because you know those tons and tons of fine print that you receive every time you're opting for a loan from a bank, you don't really go through every single word of it. I think it's humanly next to impossible to really understand the import of everything which is written in those multiple reams of paper that you sign when you're taking a loan. So, and a loan amount gets sanctioned on a certain date, but perhaps the property that you intend to buy or the vehicle that you intend to buy would be available only 3 months, 6 months, 8 months later. And hence, if the interest starts accruing to you as a consumer right from the day that the bank decided to go ahead and offer that loan to you, rather than the date on which the money actually hit your accounts, is obviously substantial. So it makes eminent sense, I think, for banks to be very clear that these little fraudulent, bordering fraudulent activities of trying to profiteer on account of overcharging interest needs to really come to an end right now. But if we were to look at, on the contrary, what has happened with ICICI Bank, this story, of course, is bad news for ICICI.
Before we move to ICICI, this is a very interesting consumer interest angle. So let's say I go and apply for a loan. The bank cannot charge interest from the date it decides to disburse, but from the actual day it has disbursed.
Yeah, so
a lot of people don't know that.
The bank may decide to lend out money to you in any case, but it's not subject to when you and your bank sign the documents that you will indeed avail a loan. Rather, it has to start from the date that the amount hits your account or hits the account of whatever transaction you're making, and that has to be the start date, which is fairly obvious. I mean, there's nothing new in this, but there have been lapses reported in the statements of financial year 22.
Perhaps that's one of the reasons why banks get away with it.
To be honest, the RBI circular is silent on how many such cases have emerged. Perhaps there is just one case. Perhaps there are just a handful of cases, and it could be, it could be an oversight. So, let's not read into too much of corporate governance potential issues with Kotak Mahindra Bank at this stage. But I think even if it has happened with 1 customer or 5 customers or 100 customers, it is an issue that banks need to be very cognizant of not committing in the future. Now, if we were to move to ICICI Bank, then the lapses seem to be a little more grave when it comes to corporate governance. Now, the fact that 2 directors on the board of ICICI Bank are also on the board of companies or a company that ICICI Bank has lent to and has not reported to the regulator, which is RBI, then it definitely does not bode well for a bank, which in any case, after Chanda Kocher's exit and the controversy that raked around Chanda Kocher's exit and lending loan to...
And the quid pro quo.
So I think, overall it's something that ICICI Bank definitely needs to take seriously. It will. Again, 12.19 lakh crore rupees. Not a big sum of money for crore rupees. Not a big sum of money for a bank as large as ICICI Bank. But yeah, at least that the risk assessment report that banks file are being read by RBI, and these matters are being investigated and looked into. So banks obviously need to be a lot more cautious about reporting whatever they have undertaken as activities during the year.
Absolutely, and RBI there setting a precedent saying, look, we are watching even if it's 1 case or 2 cases, because we don't know how many number of cases. That detail has not come out just as yet from RBI's, the press release that was put out on the website. But we know that both banks have been penalized to a point where Kotak Mahindra Bank has to pay about 2 to 3 crores, ICICI about 12 crore rupees in penalty in days to come. But moving ahead to a story that is coming in from China at this point in time, where Chinese economy is said to have grown at a faster than expected clip in third quarter. GDP numbers for July to September came in at about 4.9%. From the year earlier, the data was released by National Bureau of Statistics, and analysts at the same time were expecting a 4.4% increase. Remember, this is slower than 6.3, 4.9%, slower than 6.3 expansion in the second quarter. On a quarter-on-quarter basis, GDP grew at 1.3% and accelerated from a revised 0.5% in the second quarter, but above the forecast of 1%. Consumption, industrial activity picked up and has surprised on the upside, suggesting that a recent flurry of policy measure is finally helping the country bolster its economic growth and progress. Chinese economy, a lot depends on Chinese economy. It's the second largest economy in the world, and the consumption in Chinese economy actually is a growth driver for the rest of emerging markets. It appears that China is coming back on track. The policy measures taken by the Chinese government seem to be paying off.
So it's tough to say at this moment just looking at data from one quarter, Shweta. So while 6.3 to 4.9 has been a slower quarter-on-quarter growth, and has, despite that, it has beaten the estimate of about 4.4, 4.5%. But yes, there is, I think, no doubt right now that consumption seems to have picked up marginally in China. Now, again, consumption in China, the large driver of consumption, the large driver of domestic growth in China has been the real estate market. But we've seen what's happened with Evergrande, and we are seeing that even Country Garden that Krishna reported in the morning today is on the verge of collapse, or is on the verge of a default. Now, I think all this states that property is one sector which continues to be slow in China. The global economic scenario is not auguring well for exports from China to the rest of the world, and the tensions between US and China, and US once upon a time being the largest, I think still continues to be the largest importer of Chinese goods, but is now shifting bases to countries outside of China, not auguring very well still for China. So I think there's a larger geopolitical, geo-economic play right now, which will eventually define whether this number of 4.9 or this trend line of growth year on year or quarter on quarter is going to sustain or not. But I think, to put it very, very simply and absolute bare bones, we can sit and take pride in the fact that Indian economy is poised to grow at 6.5% this year, as compared to China's estimate of growing at 5%, China's own economy to grow at 5%. And with this 4.9% higher than expected number coming in, it seems that China's 5% target is more likely to be achieved now. But simple point being, China is almost a $20 trillion economy, India is a $3.7 trillion economy, right? China growing at 5% means in about 13 years, rule of 72, where your size doubles, your growth doubles, or your principal doubles depending on the rate of interest. So rule of 72 suggests that even at a 7% even at a 5% growth rate, China is going to become almost a $40 trillion economy in about 13 years from now, 2026 or so. Whereas India growing even at a 6.5% rate, at best, will be able to become perhaps nothing more than a $7.5 trillion economy by about 2035 or so. So the gap between India and China will widen in absolute numbers, even if India continues to grow at a faster clip than China, because China is sitting on a much larger base. So I think our interest lies in China not growing at 5% and India growing much faster than 6.5%.
All right.
So I think 5 trillion, while a big number, great number, aspirational number, turn of the decade, 5 trillion is not going to cut it when it comes to us competing with China.
It's a 4.9%. Even at 4.9% growth, China is going to outgrow India, in a magnificent fashion.
My only question at this stage is that, you always, when you talk about data from China, first, you'll have to take that with a grain of salt. That if this China telling us that, our slowdown is actually not as slow as you think it is. So it's China, and that's essentially coming after months of measures taken by the central government of China to stem the rot in the economy. Bear in mind. So, I mean, for me, I have to take these numbers with a grain of salt as a semi-PR exercise by China to let people know, hey, we're not exactly in a downward spiral. Yes, we did find a bottom, but we're on our way up. Is seemingly the picture
we have
that
bottomed out, and the only way forward is the way ahead. Perhaps that's the message.
Seemingly,
that's the message
also
coming
the fact
in.
that China was, unlike the rest of the world, in a deflationary scenario. So there were fiscal measures taken and monetary measures taken of cutting interest rates at a time when the rest of the world is increasing interest rates to prop up domestic demand.
So growth had to come.
Perhaps there is something to look into the fact that domestic consumption is maybe picking up. Is it picking up at 4.9% or not? We don't know. The data is made in China.
All right. So we'll of course have to wait and watch out for whether those numbers are true or not. We'll keep tracking those stories. But before we close, remember, social media platform X, formerly Twitter, has announced that it will test a subscription plan to distinguish real people from automated accounts. The new subscription plan is called Not a Bot. Under this plan, X will charge a $1 annual fee for basic features. So while test won't affect existing X users, new users who don't subscribe to this plan can only do basic things like viewing, reading posts. These new users will need to get a subscription plan to like, repost, bookmark on the web version of X. So Elon Musk continues to play up, continues to make money one way or the other. $1 for each new user is
trying to. This is another one of his gambits to make money. Let's face it, the original Twitter Blue subscription, the amount of money that Twitter has lost from ad revenues since Elon Musk took over. If you ask me, all his attempts to bring back that monies that went away, how much of it has paid off?
We've got to give it to him for devising, new lucrative ways to earn money, even if it's not paying up.
He doesn't have a choice, Shweta. The company is not making money. The company is making 50% less money than what it was making before. So here is saying, all the best, Elon.
All right. I think we'll leave it at that. With that, it's a wrap on the show. Thank you for watching.
इंजीनियरिंग कर रहे हैं जो कि सभी लोग कर रहे हैं
Coaching is now starting from grade 3, 4, 5, 6.
कोटा जाने वाली बीच राह में आधे टेस्ट देके हैं सिलेक्शन की चाह में
ऑल इंडिया का बच्चा कोटा जाता है
This rat race is for rats, not for humans. So why should we even be a part of it?
The Rat Race. This and more streaming on world's first news OTT, News 9 Plus. Download now. China won't let us rest easy on our borders, but they will keep flooding our markets. What does Xi Jinping really want?
I think he wants the Indian market, no doubt about it. It's really a matter of showing their dominance.
India's great Chinese conundrum.
Nobody can contain it. Not the United States, not China, not anybody else.
Frenemies. This and more streaming on the world's first news OTT, News 9 Plus. Download now.